So what happens next, and should investors expect more volatility in the days and weeks ahead? Joining us now is Kenny Polcari. He's managing principal at Butcher Joseph Asset Management. Good to see you, Kenny.
And always a pleasure to see you.
And what a week. But you say investors should not panic.
Right. And so we have this conversation every time the market seems to go through one of these hissy fits, right? So the last thing that a long-term investor should do is make an emotional decision. And typically you make an emotional decision when you see days like we've had, which is exactly the wrong time to do it. Take a step back, see what's going on, listen to the conversation, understand whether or not fundamentally the story has really changed or whether or not these are just issues that, we've continued to talk about. And in fact, they're really just issues we've continued to talk about. There's nothing new that happened this week other than that small inversion of the yield curve on whatever day it was, Wednesday, which created this panic in the algorithms, right? Which created that big sell-off.
Right.
But for the most part, a long-term investor should do just that. They should look at their portfolio. They should see the names they like. They should take advantage of some of the price dislocations in some of those great names that they have.
And you made the point to me earlier that you think this volatility is going to continue well into the fall.
Well, I think it's August and September tend to be volatile months just because of the time of year and what happens. Next week we've got, there's not a whole lot of data that's coming out next week, but there is Jackson Hole, which is that big, Fed meeting at Jackson Hole. So they'll be talking about broad policy statements, broad monetary policy. And then you move into September and you start to have, that fall kind of nervousness as mutual funds start to rebalance, as they start to get ready for year end. And so you tend to have some volatility around that. That being said, don't get frightened by the volatility, but you should take, as a long-term investor, you should take advantage of the opportunities it creates. And
you also made the point that President Xi has a big event coming up. It is the founding of the People's Democratic Republic.
Right.
And that comes in October.
Right.
And you don't think there will be much progress on trade, which has been a driving factor in the market.
That's right, and will continue to be a driving factor in the market. But the reason I think that is because President Xi does not want to appear to be forced at this time in not only their history, but kind of what's going on in that country, to make a deal or to come to the table or appear to have been forced to come to the table to make a deal with the United States. So therefore, I think they're going to work kind of diligently at just pushing it off. They're going to have a meeting in September. That was part of the reason the market rallied again today, because they talked about that meeting being on. But in reality, I don't think you're going to see much of a deal until we get into November, December.
All right, so fasten the seatbelts. Thanks, Kenny. As always, Kenny Polcari.